Hello and welcome to my morning report chart analysis videos on Wednesday 28th of November with me, Richard Perry, market analyst at Hantec. There's not a huge amount of direction today. It does seem as though that the markets are in wait and see mode. We've got Fed Chair Powell giving comments today, which could have an impact on monetary policy going forward, really. We've seen the Fed officials becoming a little bit more cautious in their rhetoric in recent times, and certainly if Fed Powell goes the same way, we could start to see the markets recalibrating what they feel Fed rate hikes could be doing next year and beyond. So we could see some movement today on the back of that. We've also got the Bank of England giving their financial stability report at 4:30 today. Now that also will include the expectations of how the economy is going to perform in the UK after Brexit. So that's going to be an important factor for sterling. Sterling's slightly higher today, but generally speaking, apart from that, we've got very little real movement. It's interesting that sterling has actually ticked a shade higher in the last few minutes, and that has coincided with FTSE ticking a shade lower, so that negative correlation play is still in process there. Now we've got a little real sort of market moving data, I think you would argue, today. We've got the GDP, the second estimate of Q3 GDP at 130 for the States. Now it's not expected to be changing from the 3.5% from the advanced reading. We've also got new home sales expected to be 583,000 units there. And also keep an eye out for the Richmond Fed Composite Index, expected to tick a shade higher to 16. We're also looking for the oil price and reactions to the EIA inventories. We've had, I think it's 8 or 9 weeks of consecutive EIA inventory builds on the crude stocks. So that's expected to just increase by just a shade by 0.7 million barrels. But that this afternoon at 3:30 could again have some volatility through the oil price. But other than that, we're looking out for those central bankers speaking today, with Mark Carney, the Bank of England governor, expected to give his comments just about 15 minutes after that financial stability report is released. So how are we looking across other markets? Well, you're looking at yields, which are consolidating as well, just to give you a quick heads up. Again, nothing really doing there. Oil price has stabilised to an extent in the last couple of sessions, ticking a touch higher today, but again, nothing really doing in terms of the prospect of a recovery yet, of a sustainable nature anyway. So yes, there we go. Right, so my chart today is silver. Now we've been looking at silver and gold as the just the gold chart has been just rolling over in recent days, and that's reflected through silver as well. Silver breaking below 1420 on a closing basis yesterday, the equivalent of the level of 1217 on gold. I think you would sort of equate that to. And that sort of takes you back below that pivot line, which now becomes a basis of resistance. And unless you see the silver price reclaiming that 1420 level, then you could start to see the market sort of drifting back towards the lows again, 1385. So that needs to be watched. But certainly momentum indicators are sort of drifting in a more negative configuration. Look at that, those MACD lines and the stochastics rolling over. RSI below 40 would not be all that great. It would certainly suggest momentum building for a corrective move. You're trading below all the moving averages as well. So there is a negative configuration still through this silver chart. And as I said, breaking below 1420 does really open the lows of 1385, and unless you can get back above there and then start to challenge that resistance, which comes in at 1455, then I don't think you're looking especially positive in the silver outlook at the moment. So with that in mind, I wish you good luck in your trading today, and I'll speak to you later.